What's the question you think that your team, Elizabeth, doesn't want me to ask you today?
This is an interesting question. What's the question I at least want to be asked? I don't know. We should ask Elizabeth. Maybe we should.
Elizabeth, what's the question Tarek least wants to be asked?
Like, what do you think of the Polymarket CEO?
I have that question. We'll just watch you fuck it up in real time.
All right, let's see.
Okay.
Smart girl. Dumb questions.
What's up with prediction markets? And does their very existence signal the end of society? This is Smart Girl Dumb Questions. I'm Nayeema Raza, and today I'm with Tarek Mansour, the 30-year-old CEO and co-founder of Kalshi. Hi, Tarek.
Thanks for having me.
Thank you for being here. Explain what Kalshi is. Give us the high level.
We're the world's largest prediction market, and prediction markets are very simple. It's the easiest way to think about them is they're like the stock market, but you're not buying and selling shares of a company. You're buying and selling shares, yes or no shares, and whether an event is going to happen or not. A simple question that people relate to or understand.
And you can bet on everything on Kalshi, almost everything on
almost,
Kalshi. We're talking about almost everything.
Very important. The almost is very important.
The 2028 presidential lineup, the NBA playoffs, the World Cup, the U.S.-Iran deal, Strait of Hormuz opening date, or how much traffic is going to go through, whether Taylor Swift is going to meet the Pope. Who the hell cares about Taylor Swift and the Pope meeting?
Who cares about Taylor Swift?
And the Pope meeting.
I don't know about that.
It's like a weird intersection of the Venn diagram.
I don't know.
What is the single biggest prediction an investor has made on Kalshi? Like, what's the size of that?
There are obviously institutional investors that do like tens of millions of dollars in predictions. And I think that and that usually you see them in, like, for example, like economic indicators, like will inflation go up or down, or will GDP go up or like the growth.
And they're on Kalshi, like they're placing a bet on the other side of some retail investor who has
or some institution or other. I think of it as a little bit of the market for average people because
that's such a motivating tagline, the market for average people.
But it is, because, if you look at the top performers, the people that are predicting all these different things, and they're doing a great job at it, they're like average people. You would not, small percentage of them went to Ivy League school. Most of them didn't. A lot of them have blue-collar jobs. They don't trade options. They don't trade in traditional markets because they feel that they're rigged against them. Some of our best traders, the top performers, like one of them is this guy who lives in Kansas, no experience in financial markets, but can forecast inflation incredibly well.
Wow. Is he single?
I don't know. I didn't ask him.
So these people you're talking about are very different than the kind of headlines that we see. We see Trump's teleprompter guy. We see George Santos. We see the insider trading kind of
the juicy stuff.
But on your point about the average investor, it's a really interesting time for you to say this, because Truth Social, the platform in which the biggest shareholder is Donald Trump, has just announced that they have a Truth API, which will charge people up to $100,000 for early access, milliseconds early access to things like the president's own tweets, Truth Socials, posts, whatever they're called. So how does something like that change your thinking on the average investor? Because that seems like it's going to benefit the institutional investors.
I don't know what that has to do with Kalshi.
There's so much that people are trading on.
I know. If institutional investors are going to...
What do you mean? Wait, sorry. What do you mean you don't know what it has to do with Kalshi? I'll give you an example. The Strait of Hormuz, traffic, all of these questions that are there. Will there be a U.S.-Iran deal? All of those things, the president is putting out posts on. I'm not asking you to make a moral judgment on his business decision.
No, I understand the question. I totally understand the question.
How does it impact the average investor getting access when you're creating premium markets for edge information?
I don't know. This is like the age-old thing. Part of the reason why people use Kalshi is because of the low latency dynamics in the stock market.
The low latency dynamics.
What you just described. Low latency dynamic is basically when a hedge fund, whether it's Citadel or others, have maybe a little bit of a faster feed on where from the NASDAQ or the New York Stock Exchange.
So not a hedge fund, but even a market maker.
Same thing.
Yeah, the market maker.
Same thing.
Exactly.
Whatever. They have a little bit of an advantage on speed, where they can see what the stock price is going to be a little bit faster than the retail individual that's sitting on his couch. And then they make money off of that because they get the information faster, and they can that dynamic is less prevalent in prediction markets, because prediction markets don't trade this sort of super fast, low latency stuff.
But aren't people coming in and out of bets on your exchange?
Yeah, they trade in and out, etc. But it's not the same as if you want to figure out where a stock is going to go, you kind of have to figure out who's buying and selling. You have to do it very fast. If you want to figure out whether Brexit is going to happen or not, you just need to be pretty smart about understanding the state of the world. You have to read the news. It's a much more holistic thing than some sort of small micro advantage that you can gain in terms of I have a slightly faster feed or not. Our top performers are not the hedge funds.
But you're moving towards that. I heard your co-founder, Luana, talk about like the
we're
growth
getting
regions
institutional
and international.
Yeah, but that's different
markets.
from like market makers becoming a bigger part of the pie.
When I put out the question and I said, oh, I'm interviewing the Kalshi CEO. What do you guys want to know? Like, by the way, and I want to say, you did $30 billion in trading volume in June 2026. So you obviously have a lot of users and a lot of people that are, fans of your product, but you also have earned so much hate. So here are some questions from the audience. How does it feel to prey on vulnerable people and destroy lives? Why is he destroying society? Why break down every barrier between self-destructive, impulsive behavior and personal financial future? If you'd like to put frictionless betting to lonely, insecure men, why not start handing out nukes to toddlers? How does he sleep at night? Does he have a moral compass? How does it feel to profit from addictive arbitrage, et cetera, et cetera? So, and by the way, this is not like the DSA. A lot of these people, tech executives, business people, lawyers, et cetera. So this is the sense that people have, and you're not shocked hearing these questions.
I get these on comments on Twitter sometimes, and like we see them. Do you want me to address each one? What is
no?
the
I don't want you to address each one. I want to talk about the sentiment.
There's a complete misunderstanding of these markets, frankly. And I understand that the press and mainstream media, it was always the case. When Uber came around, if you read the press about Uber when it grew, and was Uber a perfect company? Absolutely not. There was a bunch of issues with that company. None of us are perfect. We're all trying to do the right thing. But if you read the early press about Uber, it's like, this is the single least safe thing that ever graced humanity. It is horrible.
Yeah.
We hate it. Stop Uber at all costs. People basically believe that Uber was an evil company for a period of time, right? And I don't think that we're there at Kalshi. I think our growth and the usage of Kalshi shows otherwise. There's a lot of people that love the product. They use it very actively. So yes, there's sometimes a vocal minority. And that vocal minority is driven by a lot of the things that are being said in the media about us and about the prediction market industry that, quite frankly, are not true. And those things generate clickbait. Like when people say about, we're listing markets on death.
Yeah, that's not true.
It's just not true. There are competitors that have listed those markets. And we are kind of suffering the consequences of that because the headlines are not competitor name listed a death market. It's prediction markets have listed death markets.
Well, you had a situation where I
get lumped in.
Yeah, so there was kind of a prediction market on Kalshi, which was when will the supreme leader be out of a job, and
But that market had a clear thing right there on the title that said it will never pay out based on death. That's how because anything.
But the dude was 86, and the United States was bombing the country, so it was like a likely outcome.
That's all these people have read the rules and they've seen, and we have very firm about principle. We stood by the principle of not letting basically people profit off to death. It was a loss for us. We refunded everyone that participated in that market because some people claim they did not understand the market, which again and we made it even more clear. But that's what it is running a consumer company. When you're running a consumer company that has a large number of users, there's going to be some people that are going to be pissed off. And society is also going to ask questions about what does this mean for society? And there's going to be critics. And I bucket the critics into two categories. There's critics that is essentially genuine concerns. They are questioning about are we doing enough on policing insider traders? Are we doing enough on customer protection, etc.? And that type of criticism, honestly, in some ways, motivates me. What are places that are blind spots? Where can we improve, etc.? As a founder, if you look at my approach, my approach in my history, I actually took a very opposite approach to the typical Silicon Valley approach. I took an approach of let me spend 4 years getting regulated up front, thinking about all the things that I need to build into the system to make sure that it's safe and people are safe using it and it's fair and it's neutral.
And did you do that because you wanted a regulatory moat around your business, or did you do that because you
think
a
very cynical view on all these things,
or because you think it benefits your business? I'm asking what was the motivation for that?
The motivation for that is we wanted to do the right thing. At the time in Silicon Valley, there was no way in hell that you would start a company in 2018 in Silicon Valley. Yeah. And the correct strategy from a business perspective is get regulated before you launch a product. And if people want it. It's usually move fast, break things, grow as fast as humanly possible, and then get regulated. And we took a different approach because I was look, I want to build a legitimate financial market that people are going to trust.
Okay.
There's a second bucket of
critics.
And I think that's just online hate. I mean, anyone who's in the public sphere just kind of receives a bunch of it. And part of it is because there's psyops left and right. Part of it is because the media tends to be clickbaity and generates all these headlines that are negative. And part of it is because we have a massively organized incumbent industry in the casinos and sportsbooks and others that have come out after us and seeding all these narratives against us left and right. But it doesn't make it true. I don't know if you want me to address one by one, which I can.
I think that what's interesting to me is understanding the overall why what you think your company is doing and what your users think and that your company is doing is so different to what many people. I'm not going to say it's a vocal minority, and I'm also not going to say it's a
So if
majority.
people are concerned about, how is it that our critics are people that are not using our products, worried about the people that are using it, that are, really love it?
As I'm hearing you, like you're putting yourself as, a person who's going to Washington, who's trying to get the regulation. You're framing it in this noble way. And part of society's concern is there have been other actors who have come out and done that like Mr. Altman goes to Washington, Sam Altman and OpenAI. Mr. Bankman-Fried goes to Washington. He was the one that wanted regulation in crypto, and he was showing up. And neither of these dudes,
which large
both
company?
Sams,
I understand you're using some examples.
Yeah, but like neither of these are good examples. So I'm curious who.
Well, you use
see.
those two examples.
Yeah, but I'm saying, who do you think? I'm curious, who is your model?
Which large consumer company CEO does not go engage with regulators and policymakers?
Well, I mean, Travis didn't want to. Travis Kalanick, when he was doing Uber.
You think that was a good idea?
No, but I'm asking you, who do you think is a good model? Obviously, I've given you two bad ones, both named Sam.
I mean, every single other, founder, whether it's, Vlad at Robinhood, whether it's Tony at DoorDash, every tech CEO or CEO of any large company, you have to go engage with regulators. And I've done it not when even, and this is the difference, I didn't even do it when the company got large. I used to do that before even launching a product. And I was engaging with regulators and I was engaging with policymakers. And that's by virtue of being a regulated company.
Yeah.
My alternative is actually going offshore and doing a bunch of things and getting big and then coming and running around DC. But I was like actually running around DC before even launching my product. And Kalshi has done an incredible job. If you put away the clickbait, like if you read below the headlines, like, prediction markets, insider trading. Then you read below the headlines and you read the text in those stories, you see actually that the insider trading is happening on offshore platform like Polymarket, etc. And that Kalshi is actually policing it and catching the bad actors.
Yeah, I want to talk about that, how you do it. I don't know how you catch these guys. So it's
pretty easy to catch these guys if you want to do the work.
What is like the right analogy for you in Polymarket? I was trying to think, like, are you Lyft to their Uber? Are you, Airbnb to their VRBO? Like, what is the right metaphor for you guys?
I don't know. It's a regulated financial market and one that started offshore in unregulated territories. I don't know. I mean, there's some crypto comparisons, I think, because they're like financial markets. But I don't know.
What's the nicest thing you can say about Shane Copeland?
Nicest
thing you can say about the founder of Polymarket?
Well, I think he's definitely like ambitious and like, he's pretty like strong-willed. I mean, I think he's built a global brand that a lot of people know and a lot of people like. I mean, some people don't like it, but a lot of people like it.
Yeah.
And I think it's very impressive.
What's the meanest thing you can say about him? I'm kidding.
I'm not going to say something.
I'm kidding. What I really want to do is, like, in this interview, I basically heard two types of interviews that you do. One is kind of like the VC type pods where you talk about the founder journey, and those are like, maybe we'll call more fluffy interviews. And then I've heard this other kind of category of interview where it's like combative. Someone is trying to get you to say that Kalshi is gambling. You're boring them to death talking about like the 1905 grain case from the Supreme Court. I don't think either of those conversations are particularly interesting for my audience. What I'd like to do is, I see you as like this category of founders who are going to be influential in the creation and design of new worlds, markets, et cetera. And I have, interviewed and produced interviews with all kinds of people like Mark Cuban, Sam Altman, and OpenAI, Elon Musk, Brian Chesky, like people who have been in that space, who are creating a category. And I'm really interested to understand how you think.
Yeah.
I think what we go to is like a lightning round where we try to understand how you've drawn the lines in some of these markets. So let's start with death markets that we talk about. Kalshi explicitly doesn't allow violent markets defined as war, death, nuclear war, kidnapping, and missile strikes.
There's more, but yeah.
So why...
Like wildfires. We don't do wildfires.
Wildfires. Okay, so why and when did you decide that? It's very clearly like
Day
organized.
one. I mean, when we were getting regulated, this is the whole 4-year process when you're talking engaging with regulators. But day one, we've always been very firm about like, you don't want to create markets that can directly incentivize a bad behavior.
So
like
you don't want to create a
hazards.
market where like is someone going to die and you incentivize someone could go kill them.
Yeah, exactly.
Or have a gender reveal party
or like
and start a
light a
wildfire
fire or whatever.
Yeah.
I mean, like all of this stuff is, and you don't want to do that because I think there's a moral hazard. Like you don't want to create those types of things, and that's where the line should be drawn. I think, by the way, the law in the U.S. doesn't allow these types of markets. I believe. And or at least like gives the regulators the ability to shut down these markets, and a lot of these markets that have enlisted offshore by offshore competitors, and we've been trying to educate people that like we are not the source of these markets. We disagree with these markets. We think they're immoral. We think they're a bad idea, and I stand firmly by that.
So you do though allow weather markets?
Yeah,
because weather markets are useful. Because why?
Oh, totally. I mean,
Is there a lot of weather market trading?
Well, weather derivatives have existed forever. Like
Yeah.
people trading on weather futures is just like a very age-old question. But like there's a stock market which is like moving money from someone who has it to someone who needs it. That's the stock market, capital allocation. Our markets are what we call the derivatives markets. What the regulator, the CFTC does. Derivatives markets are not capital allocation, and they're not moving money from someone who has it to someone who needs it, but they're moving risk from someone who has it to someone who seeks it. The second thing they do is they get us smart. They forecast where things are going to be in the future.
Yeah. So like an example I've heard you give that I think will help clarify for people here is like you talked about how in the 2016 election there was a conversation about will Donald Trump win or not, and there was a sense that if he won, the stock markets would plummet. But in fact, he won, and the stock markets went up. And that kind of proxy, in that case, the proxy is a bad proxy for the actual event.
And it's funny because when people think about prediction markets are new, they're not new. They're just been doing, and they were being done in a bad way, and also inaccessible. Like if you are a large institution in Wall Street, you can take a position on our election. You have been able to do that for decades.
Yeah, of course.
But if you're an average person, you couldn't. And that really
bothered me. Well, you could in different ways, but like in less regulated.
Not in a regulated, proper.
Exactly.
I mean, the point is that you couldn't really. Let's take the example of the election. That's a good example. Before prediction markets, how do we get informed today about who are the leading candidates in 2028? How? It's like some mainstream media. It's polls, but people don't really trust the polls because it's run by elites. But the nice thing about prediction markets, and there's something so elegant about them, is it's not a metric that's coming top down, that is handed by like a select group of people and institutional elites that tell people, oh, here's the candidate to watch and here's the candidate not to watch. The crowd is deciding.
Although you can have market movers, and you have found some and weeded them out. Like you can
sort of, but it's very hard to move a market. And we found that like even if there's a big institution that comes and tries to move it in one way or the other, it lasts a few seconds because there's an incentive to bring it back to the right price. The crowd wisdom topples.
But you can make money in those seconds.
The people that correct for it make the money. But the people that are trying to move it in an unnatural way lose money usually. So they get punished. But like predicting all these things and having a crowdsourced estimate of all these different things is a very elegant way to deal with them. Because, historically, it's like, think about earthquakes.
Like why is it better than AccuWeather or whatever, Dark Sky or...
It works better. It's more accurate.
For weather?
Yes.
Because they're using all of those inputs.
It's the beauty of the wisdom of the crowd. This is the whole premise of what we do. The whole premise of what we do is if you bring a large, diverse group of people, and you cannot pick them in a crowd. It's not like, the Wall Street guy that's wearing the, the Wall Street,
It's not your MIT buddy or whatever.
It's not my MIT buddy. It's random people that you could not pick in a crowd. If you bring them in a group and you have them predict the future, they will be weirdly and crazily accurate.
Sports remains like the majority of your predictions market, correct?
I mean, it's like, it is a majority right now, but that majority is declining very rapidly because the amazing thing is people understand sports and they like sports. And they love trading it, and that's great. And it's a way to onboard, but it's been an amazing way to onboard a lot more people to a lot of the other markets that like they're getting interested in. And you see that in the, people are now getting more interested in like political events.
What about, we'll get to political markets in a moment. What about pharmaceutical markets? Because we started talking about at the top, and I want to make sure I give you a chance.
So why do you think they're very bad?
I mean, I don't know.
Walk me through the argument.
I actually was having
this conversation. By the way, this is one of the examples of like a ton of comments of, oh my God, this is like, but tell me what you think.
I was having this
argument?
Conversation with Mark Cuban, and Mark, I think, is invested in Polymarket through like proxy or whatever. But he was saying just because something looks bad doesn't mean that it is bad. I agree with him on that. And I was thinking about the incentives that it creates. Like there's all kinds of information that people in a cancer trial have that maybe they could use as insider trading, which we'll get to separately. I actually think this is the thing with pharmaceuticals.
I want to stress on this. I'm going to do the journalist this one. Why do you think they're bad? Let's just you and I brainstorm.
Well, I'll tell you. I'm telling you.
No, but let's brainstorm. Let's brainstorm you and I.
But I want to tell you why I think that.
The worst argument. Like
but I don't want to give you like a bad straw man argument that you can like blow over. I want to tell you why
not a bad straw,
like
a genuine. Like what is the genuinely worst argument around these markets?
I think because they're thin markets, right? I don't think pharmaceutical markets right now are
good
either.
It. So
thin markets meaning that a single investor could come in and make a big bet that could fundamentally shift what we decide to invest in as it relates to drug development or
so let me address
therapies.
that concern. Yeah. So first of all, there are markets on whether drugs are going to succeed, and they're called the stock market.
They're Eli Lilly stock or Novartis stock or whatever.
The newcomers. Usually the newcomers, a biotech company gets started, flashy CEO, super charismatic. Oftentimes, by the way, the biotech CEOs are super charismatic. Why? Because they have to sell the stock before they have a product in market. Usually a company gets started, you get a product, you get a lot of users, you get a lot of revenue, you win as a company, and then you go public. A lot of these companies have to go public before they even have FDA approval, right?
Yeah.
And it happens very often.
Because they need
And
the
so-
liquidity.
And how do they do that? By saying, oh, we're definitely going to get FDA approval. This thing is definitely going to work. They have an incentive to just basically say, they have an incentive to tell people that like the odds of success are probably higher than they are because, that's what, the CEO of a public company should do. Now, the thing that's interesting about it is we already have a prediction market on the success of drug discovery in that stock. The thing here is that like that stock is equal to the probability of success of the drug at that point, because now the drug hasn't really succeeded. And if the FDA approves that drug, that stock is going to go materially up. And if the FDA doesn't approve that drug, that stock is going to go basically to zero.
You're talking about like a single therapeutic or dominant
The
therapeutic
new
stock,
biotechs,
like a new
which
biotech.
is usually all the new biotech companies. Now, the problem with the stock is, it is actually much more influenceable by like Wall Street and a bunch of other things. If the CEO is very charismatic, if he has the right friends that are buying up the stock, all these different things. So it actually kind of, if the correct value is like 70% chance of success, that thing might trade at like 80%, 90% chance of success. It is actually not the correct thing. There may be a premium or a discount or whatever it is. And so what's amazing about these types of markets is that you're now crowdsourcing, you're giving a much larger pool of investors or people the ability to kind of give us an additional data point to that one that we already have.
So one way that you would find edge, say I were on Kalshi and I'm like betting on this, is I might then start calling up friends who have AML or other cancers and they're in trials and starting to try to get information from them as a way to understand how the trial is going.
Isn't that a good thing?
If I'm a cancer patient, I definitely don't want to be called by like random investors. I mean,
I agree that like it sounds a bit, but think about it, because for the next cancer patient that's considering it, wouldn't they like to know what the experience of others have been? Assume there was a bad drug that's in the market right now, right? And obviously that's a terrible thing. Yeah. And some people are
Don't you want to know as soon as possible?
Don't you want an investigative journalist to start calling up all the people that are basically, taking that drug and aggregate a massive file on this thing and then put it out to the public? Do you want that or not?
I mean, the difference in these two examples, an investigative journalist is like putting out the story so people can know. The prediction market investor is making a bet so they can make a profit on it.
This and one way, so that's a very cynical way of putting it.
People knowing it, but I'm not saying.
No.
I mean, you can dismiss it as cynical, but I'm just saying
it's not. I'm not dismissing it. That's one way to put it. But let me rephrase that a little bit. Let me rephrase it a little bit.
Yeah,
we are creating an incentive now for people to go out and do the research.
So, but what about the other situation where like the drug is going to work, but there are some side effects or there's something, and then you end up like not investing in a really good drug?
I'm a believer that more information is always better. That's my belief.
But I think the difference, Tarek, is, and I really like, and by the way, people are going to hear us and they think that we're like arguing, but actually this is just a Lebanese and a Pakistani having a conversation at like totally normal household volumes.
That's right.
So, but for me, I'm like
That's actually right.
Isn't it so true?
Typical.
But for me, like the idea that it's like, what is the incentive for knowing the information? And I'm not here to be like, oh my God, journalism, it's the best thing, and we're just putting it out in there in the world of transparency. But there is a difference between knowing something to inform people and knowing something to make a buck.
No, this is it's a lot of decision making gets made centrally, but a lot of information that's relevant to the decision is distributed. Yeah. And I've said this a million times. You need an incentive, some degree, something to give someone some sort of incentive to go and probe all the places where there's relevant information for something and then bring it to light, bring it to transparency.
All the information, but not insider information, which we're going to get to. Not insider
trading, because that's cheating. Like, and there's like a philosophical reason for that, because if you let the insider trading, then nobody trades. Yeah. But my point is, markets do a very good job at doing that because they provide that incentive for people to do that sort of research that doesn't exist otherwise.
So Mark Cuban asked this question: how does a bet get confirmed as a winner or loss in the pharmaceutical market?
Like, it's the stages of approval. I mean, so you have a market, you list the market.
Yeah.
By the way, I don't think these are bets anymore that they're, you're betting on a stock in the stock market. If you're using bet in that realm, fine. Let's say, okay, there's a drug. Will it make it through a certain stage of approval? Let's call it final FDA approval, which is usually, I think, stage 4. You can buy yes shares or no shares, and that share will pay out. Let's say right now it's saying 20% chance that it's going to make it. It will go to 100 if the approval comes through, and it will go to 0 if it doesn't. And that's usually the FDA basically approving or not.
Yeah. Right? And you have all the same issues there that you're going to have to make sure that the FDA's, regulators, cousin, et cetera, isn't the one making the trade,
But that's
etc.
illegal, yeah.
So that exists elsewhere. Okay,
But
so
that exists in the stock market too.
there are so many other markets I wanted to go through. There are markets for Costco hot dogs. There's the market for the Pope that we talked about. There's a whole Reddit thread on how Polymarket has ruined the show Love Island. People are very upset, but we're just going to move on from these.
People are very upset, but they seem to be growing incredibly fast, and like people are using them a lot.
So I mean, I don't know. I don't watch Love Island, but people seem to think that there's some kind of interplay between the prediction market, the Redditors. Do you ever worry about making us like dumber as a society, like leaning into silliest?
How is that remotely possible coming from prediction markets? The people that are succeeding on Kalshi are like spreadsheets, math, analysis, reading below the headlines, skeptical, cynical.
There's a lot of like play, right? There's a lot of play money of like, I want to play on some random TV show. I want to play on. But
that's the type of people that will not over time, like, the people that are doing it on the side and are not like, I mean, it's like going and trying to win the Olympics. The people that are like, drinking Coke and eating burgers are probably going to, be outperformed by the people that are like super disciplined and running every day and doing the marathon every week and like whatever. And that's the same thing in a highly competitive environment. The point is the incentive structure. When you say something dumb on social media, you get dopamine hits. When you say something dumb on prediction markets, you lose money. So how could I possibly be making society dumber if I'm punishing society when it's saying dumb things? It's the exact opposite. If anything, it's making society more research.
What do you think
calibrated.
Is the best criticism someone's had of the overall business market of prediction markets? What's the one that really made you stop and think?
A lot of it, I think a lot about it. I mean, there's a lot of dumb stuff flying around, but like I think that like there's one that's interesting about how do you define what's insider information, and that's like an interesting line, and we can talk a little bit about like how it's defined stock market, how it's defined us. I think there's questions around customer protections that we have to be like very conscious of, and I actually think if you really dug into Kalshi and the incentive structure in our system, because we're a neutral marketplace, we don't make money when people lose.
You make a percentage on the trade.
I make as much money if they win or lose.
You still make money.
We don't make more money if someone wins or loses. That's critical. I make 1% whether someone wins or loses, whereas a casino drives the revenue from losses.
Right, but if a loser shows up every day to keep on making
the same way that a winner shows up every day,
you'll keep making money off them.
Doesn't matter, again.
So I just want to draw that distinction.
But that's for the same in New York Stock Exchange. If a loser or winner chose, they're gonna make the same amount of money. But that neutrality, I am neutral. When someone loses a lot and they're doing something that may harm them, like irresponsible behaviors, I'm not on the other side of that. I'm not making more money if they start doing that type of behavior. I'm not, because I still take 1% of whether they win or lose. Whereas like if you're a sports book, you kind of like these customers. You want them to come back because that's how they generate revenue. My incentive like enables me to be more thoughtful and more conscious about limiting those types of behaviors.
Yeah.
Because it's a small minority that gets harmed.
I acknowledge your point that it's not the same as like a casino on the other side of a slot machine where like everybody puts in money and the house wins. But I do think it's not a non-zero incentive to increase the volume of trading that happens.
We're fully incentivized to increase volume for sure.
Okay, so let's move on to insider trading. So there's been some recent stories, and you could say they drive clickbait, but Trump's teleprompter guy was placing bets on Kalshi, allegedly earns over $100,000. This is one that's out in the open. Brian Armstrong, CEO of Coinbase.
That's not insider trading.
This is not insider trading. This is a troll. This is a different thing, a troll that he does. He's on a call. He's on an earnings call for Coinbase.
And he listed them names.
And he sees there's a prediction market for what words he's going to say on the earnings call. And he says, like, before we end the call, I just want to say blockchain, stock, staking, Web3, et cetera, to make sure that so he's moving a market, manipulating a market. And then just this week, George Santos settled with the CFTC, your regulator, for $35,000 following the finding that he'd been betting on his own attendance at the State of the Union in February while tweeting the opposite of his intended actions. He definitely did something terrible, yes. Yes, and honestly, I can't believe George Santos is still around. It's like he's on Cameo, he's on Kalshi, I don't know where this guy is in. But how do you have caught, in these cases, the teleprompter guy.
Exactly.
The thing, you have caught them. In other cases, like congressional representatives and their staffers, you have banned them, barred them from participating. When I look at this, I see two things. I say, okay, Tarek, he's catching some people. You've got your own compliance, et cetera.
As a nuance, people are going to get bored.
Yeah, but you're catching some people, which is great. But I'm like, who isn't he catching? Who isn't he catching fast enough? It seems like a game of whack-a-mole. And the question is like, why not plug all the holes?
Not at all.
See, I started so nicely, then you go,
not at all.
Keep going.
I mean, like Lebanese, Pakistani.
Yeah, keep going.
But no, because like here's a few things. First of all, the fact that we caught the teleprompter and George Santos is like it's validation of our system, right? Like it's validation of the fact that whoever it is, no matter who it is, we're going to catch and enforce our rules uniformly and fairly.
How do we know who you don't catch?
Well, is it perfect? Probably not. But like, here's the way that I would rephrase that question. Do you think that people are insider trading the stock market?
For sure.
Are they catching all of them?
No.
So first, what we need to do is like, we need to first set the standard. But the point is like, the standard cannot be, are you catching everybody?
Yeah.
The standard should be, are you basically detecting and deterring?
Are you getting faster at catching people?
Yes, and we've always been pretty good. I think now we have more cases because we have so much trading activity. But this is the thing about prediction markets is honestly a blessing and a curse. It's a curse. It's very transparent. All my trading activity is public for everyone to see. Every time someone puts a trade, you can see it. You can go to Kalshi.com, even if you're not a user, and see it.
See your username and what you're betting on.
Like see the trades immediately. And
I can see the trades, but I can't see your username.
It doesn't
and what
really
you're
matter
betting on,
because
right?
usually it looks weird. It always looks weird. It like always looks like, something is 10% and all of a sudden now someone is buying in bulk.
So, I mean, couldn't someone game it by buying slower?
Well, it wouldn't be worth it, basically. Like this is the night, like fraudsters usually, they don't do it for $100.
They quicken out and they have a
Like, why are you going to commit a financial
car
crime? Like, you're going to commit a financial crime for $50? Like, you're not going to do that, right? Like, I mean, maybe you would, but like...
Maybe I would, but yeah.
But I'm saying, but the point is, it's so transparent, which is a curse because
How much would you commit a financial crime
I would
for?
not have committed a financial crime for any amount of money because I think, it never be... I would
It
not.
would be bad, yes.
I spent 4 years getting regulated up front. I'm a paranoid. I'm a risk-averse guy.
I'm sure.
But like, but the point is, like, it's so transparent that like everyone sees it, which means that everyone will talk about it. But that's a good thing because the blessing is everyone sees it.
But everyone sees the stock market too. The market goes up and down.
Can you go anywhere right now to see all the trades that are happening?
I mean, sure, I could go sit in like the ticker at the NASDAQ and the...
I have a thing that you can put in a spreadsheet.
Yeah, Bloomberg terminal and see the thing.
No, that's just the hedge funds can see that, but you cannot as an individual without paying Bloomberg to do this.
I mean, I can't... Well, how am I going to afford that? I have to pay $100,000 to get early access to Trump's Truth
But how about you go to Kalshi.com?
Then I got to get $200,000.
But you can go to Kalshi.com
Okay,
and
this
see
isn't an ad. This
free.
isn't an ad. But yes, okay, so I get your point that like you guys you're getting faster. Who are you worried that you're not catching right now?
I just think it's like, but I didn't finish the point about George Santos when he did it, or all these cases, our users and our systems immediately flag it. They immediately say, hey, something is weird there. And so we catch it immediately. Literally 30% of our team is investigation and compliance.
How big is your team now?
We're like 200. But my point is like, and then you have to punish it very hard. Like and that's detecting the deterrent. That's the case for all the financial markets. And when you do that, it's like you cannot catch all the crimes on the street, but when you catch a crime, you punish them really hard.
So who are you worried that you're not catching right now?
I don't think that much because
like
it's very clear in the data. It's
like cousins of, like third
cousins
degrees.
Of are also easy because, not easy, it's harder. Like if a person obviously directly does it, it's very easy. But if they use a cousin, it still looks suspicious in the data. So we might catch them and like we can enforce against them. Maybe the biggest worry is like very small. Like if someone does like $10.
The petty financial thefts.
Very petty. I think that over time as you punish people and you educate and our systems are getting, I think quite good at flagging. That's why you hear about all these cases. I think it's a very solvable problem. You have to be very serious about solving it. Unfortunately, not everybody in the industry, especially the offshore guys, really are very serious about that.
Yeah. I want to change gears a little bit right now. Donald Trump Jr. is also an advisor to Kalshi. I just want to know, what's the best advice that Don Jr. has given you?
A little cliffhanger. We'll be right back. Guys, today's sponsor Dumb Question is from me. I'm going to take the next minute to tell you a little bit about Smart Girl Dumb Questions and to ask you for your help in continuing to make independent, fact-based, and curious journalism. No, I'm not going to ask you for money. Here's what I need. I would love you to tell 10 of your friends about the show, or 100. I don't know, blast that reunion group that you muted, and definitely tell your mom, and tell your mom to tell her friends too.
Donald Trump Jr. is also an advisor to Kalshi. I just want to know, what's the best advice that Don Jr. has given you?
It's a good question. I think it's been a lot about like essentially going direct and talking to people directly, frankly. Like that, that was the whole like thing about when we came out in 24 around the election. There was this like overall like sense of Twitter and prediction markets are like this crowdsourced form of information. And there was like a little bit of rejection of mainstream media that's kind of honestly continued till now. And I think it was like this idea that like, if you're not going to be granted a fair, shot,
or a friendly shot. Say what you want there.
Like a friendly, like a mic.
Yeah.
In traditional like news outlets, you're gonna have to basically build.
So he gave you like Lulu Maservi Cheng advice of like go direct.
Yeah,
to,
Lulu.
people.
That's like the same. And I honestly, for a while I was like, no, I think. But now I'm realizing actually you have to just you have to at least. I mean, this is to me a form of going direct.
So
you're
here. Yeah, I mean, I imagine you're just. I mean, I think we're having a very direct conversation here in a way that I can ask you the questions very.
You brought it out of me
say,
because I think it's the cultural thing.
The cultural thing. We're both from the region.
That's how I debate with my mom and my
really?
brother.
What is your mom?
It gets heated and people get pumped. And you know how it is. Like I'm a Lebanese household. There.
Everyone yells and then you go get ice cream. It's fine unless it's raining, in which case you hope the guy's just making money on Kalshi. Here's the thing. So the equity, is the equity worth the price tag of that advice, which has been pretty general advice that's out there? You gave Don Jr. $300,000 in equity in January of 2025. So this is a week before
I don't know, by the way,
Daddy's inauguration.
I don't know if that number is true.
Okay,
I know it was reported and there was a big press spectacle about it. But
you don't know your cap table?
I literally have thousands of people on my cap table.
Like you don't know the president's son is on your cap table?
Quite literally. And it was not, we did not.
Do you want to text someone and find out?
I don't want to talk about the comp of any of my advisors.
Okay.
And not Don. But I think, I understand this is a topic that people love to talk about.
Yeah, people are curious.
I know they're very curious.
I just wanted to give them the numbers. What's been reported, I just want to say that what's been reported, and you can say you're not sure. What's been reported is that $300,000 were given in equity in January 2025, so a week before Daddy's inauguration. That's worth about $3 million right now because you went from a 2 to 20 billion.
I don't think that numbers are right, but yeah.
That's very interesting. Also because Don Jr. is on the advisory board of Polymarket. Do you generally like to have advisors that are on the advisory board of your competitor?
We have probably a million firms, whether it's comms or public affairs or whatever, that work with us, and we work with a number of our competitors.
So sorry, you have other advisors that you share that are on the advisory board of Polymarket? Or FanDuel,
made a broad statement. And yes, whether it's Coinbase or Robinhood.
But you're also partnered with them, right?
Yeah, but I think it's a meaningful competitor. I think
but people are concerned about this. You understand why people are concerned about this. You come from Lebanon, I come from Pakistan. We understand why people are concerned about this.
I'm just saying, and it's all about the principles that you uphold and the thing that you basically have approach with. This notion that we just got regulated last year and all of a sudden got what we wanted is incorrect.
I think the question is, we are in a moment where there is a lot of concern about a president who has made $2 billion in his reported earnings in the first year of being in office. That represents a more than threefold increase from his first year in office in 2017. And, there's ballroom donations and there's this and there's a lot of questions. And look, you and I come from countries where there is like a wasta way of doing business, et cetera. And I'm curious, is this wasta? Is your advisory relationship? Tell you, and explain what wasta is, maybe?
You can explain what wasta is.
Wasta is like it's a fast track of relationship.
Yeah, I think
the
answer is an unequivocal no. And I'll tell you, there was never in any way, shape, or form, I said this a million times, absolutely any regulatory involvement. It was made clear by our side and was made clear by the other side from day one. I understand, people kind of like to bring that up, and we've gotten bashed over it over and over, I don't know, in the last 2 years or so. This comes in a kind of broader sort of dynamic of if we came out in 24 and we're small company that just realized over time, you want people that help you navigate the court of public opinions, people that will help you navigate all these different sort of the policymakers, DC, all these different things. And that's why all these bigger companies, if you look at them, if you look at their boards, you look at, they have people on both sides of the aisle that have connectivity to both sides of the aisle.
I mean, Dick Costlow, by the way, asked me this question. Do you know Dick Costlow, former CEO of Twitter, investor? And so Dick said, you have an administration that's friendly to you right now from a regulatory perspective.
He always say,
what happens if the future administration looks more like New York State right now, which has just leveled a lawsuit against you guys, which we'll get into. Dick said, how do you set up a company that is able to ride
do the right thing? It's very simple. Do the right thing. And
but someone
you have to build a relationship with both sides, which we do, and we have good relationship on both sides, and we have some critics on both sides, and not everybody agrees. This idea that's people love to make things partisan. I don't think prediction markets are. I think just doing the right thing and people loving the product and seeing it as as safe and responsible and all these different things. And I think our customers do. Our customers really do.
I was surprised that because you had taken this long road, and I've been kind of tracking Kalshi's journey a little bit, that you had been taking this long road to regulation, that you weren't going at the Travis Kalanick Wild West approach, that you did do this advisory relationship with Donald Trump Jr.
I was surprised. Has to do anything with it. That has absolutely nothing to do with it.
But the blowback and the optics, even if you're saying the real ticks are fine, the optics of it.
Yeah, I think I could see that, but it's also there's a part of it which is you cannot control. You're gonna be swept into political narratives left and right, but it's narratives. People love to kind of lump us in with crypto. They love to lump us in.
Well, that's where the majority of Donald Trump's $2 billion wealth gain came from.
I don't know about
more
any
than
of
$1
that. I'm
billion
not
came
gonna
from
comment on any of
crypto.
that. That's like not,
Yeah, but
not
do you
for
feel
me.
like there's different terms of doing business in this administration than the last one as it relates to things like advisory?
I think the regulators on the front line, a lot of the people that we engage with our regulator on the CFTC, some of them are the same, some of them are not. But the level of like diligence, the types of things like, when you're actually working on your risk model, when you're actually working on your customer protection, the cases that you refer, all of that is the same.
Do you think I should get Don Jr. to be an advisor to Smart Girl Dumb Questions?
That's a question for you. I don't know. It would make for a fun pod, honestly.
I mean, Hunter Biden's like having a moment. Should you have him as an advisor to
He's
Kalshi?
funny. I find he's pretty
he's
funny.
very
right
funny. Okay.
Maybe we should, honestly. It could be like a
What
funny,
is your last text message with Don Jr.?
I literally don't know. I mean, we haven't spoken in a while, and I'm not gonna. I mean,
you don't want to open it up. Okay, it is a crazy.
It might be
question
like congrats on his wedding.
It's a dumb question to ask. That's what the show says.
We'll take a quick break and be right back.
So let's move on to your regulatory status. So Kalshi is the first federally regulated prediction market. It's regulated by the CFTC, which is the Commodities Futures Trading Commission.
Yeah.
And this allows you to bypass state regulation, right?
It's not about bypassing anything. It's the same way that the New York Stock Exchange bypasses state regulation. The way that the law is structured is that financial exchanges operate under federal law, and insurance is operated on state-regulated insurance.
And gambling markets are operated state,
by the way, you can buy insurance on financial markets, but that's considered a financial swap, like the fancy term. But like that's a financial market.
Yeah. States are not happy about it. Like 44 or 45 AGs wrote this letter to the
Casinos
CFTC.
are not happy about it.
You're saying that the AGs are acting on behalf of the casinos? That's your accusation?
Well, there was a letter from one of the gaming commissioners in Maryland that was literally apparently there was some reporting that it was written by the American Gaming Association.
I mean, lobbying is so dark and twisted in this country. I don't know.
So like this notion that
I don't think that every single
there's
AG,
notion that there's some ethical battle on prediction markets.
There are 44 or 45 state AGs who wrote a letter to the CFTC effectively saying that the federal government should back off so that states can regulate or ban the platforms themselves. Okay. Could you actually name the 5 states that like you, by the way?
I cannot name the 44. I cannot name it. I mean, I just
Florida, New Hampshire, Missouri, Texas, Georgia. I was like very curious. But
there's
you're
a lot
also
of clicks
being
that are being generated,
No, I don't think so. So there's so much suing here right now. States are suing you. You're suing states. The CFTC is suing states to protect their turf and regulation,
That's right.
et cetera. But last week, New York filed a $36 billion lawsuit to completely halt Kalshi's operations over what they say is unlicensed gambling. You say?
To what?
What do you say back to the AG?
I mean, like we're very, this. I mean, we see this as like kind of like a nice headline, and I think that
a nice headline.
I mean, it is. I think that the law, there's like a number of courts, especially appeals court, that agree with our legal analysis, and I think that, but even if you put the legal stuff aside, I think that what is the intended outcome, right? Like, what is it? Like forcing our American. So it's interesting because our customers, we have over 1 million New Yorkers that are active on the platform, and what is the intended policy outcome out of all of this, right? There's 2 things that they usually tell us. It's customer protection and then taxes. That's what people usually talk about. Taxes is where we have a proposal. We always tell people, like, if there's a reasonable tax you want to tax prediction markets, I'm fine with that. Like, I think it can go to a number of great causes, and that's great. And I think that's one place where New York could actually raise additional taxes for the state to fund a bunch of other, a bunch of the things that need funding right now.
You want to pay gambling level taxes of like 51%?
I think there's many taxes, and it's different. The model is different. I'm not taking money from customers the way that the house is. It's just a very different business model. But we can pay taxes that are commensurate with like a financial exchange structure, and that would raise a lot of money given the growth of the industry. But the intended policy outcome is what? Like when you ask the average consumer, it's like all of this is doing is telling them you don't have a choice but to go offshore or to go to a sports book. That's a very bad outcome for these consumers.
I understand it's the path you've kind of gone towards is federal regulation. Yeah. But why is it better that you be regulated, not from your own efficiency, but why should it be regulated at a federal level versus state level? Like why would it? I know it would be cumbersome to your business, but why would it be bad for consumers?
Yes, that's the exact same reason why the NASDAQ and New York Stock Exchange are regulated at the federal level. Because a marketplace needs global liquidity. It needs consistent rules that everyone has fair access and equal access and equal obligation. And it's very different from me setting up shop and say, hey, I'm going to receive trades from you and I'm trading against you. I need you in New York who's trading against someone in California who's trading someone in Texas. Imagine the New York Stock Exchange has to be, you can only buy stock from a New Yorker. Then you know what would happen? It would get way less liquid and the prices would be way worse. It would not work. You need scale. You need global scale for a marketplace.
Do you look at any state regulations and think, oh, those are good, we should put those in to protect our consumers?
Yeah, I think about it, but this is an interesting question. So that, for example, when you ask me about the fair criticism, like if there are genuine concerns, like I'm always open ears about like, are there things in our system that you think are not there that we should be doing, right? And that I could do legally, obviously, and it's so interesting because like when people talk about customer protection and state regulations, you know how many, there's 40 states where like sports betting, the traditional sports betting is legal. You know how many of them ban explicit marketing to minors?
I've heard you say that it's 1 or 2, but I had to go fact check it, and it's not accurate that it's
It
1
is.
or 2.
I mean, I can send you the chart right after this. On social media, you basically will not get slapped with a fine if you basically market directly to consumers on social media. There's all these, but the point is.
So how many do you think it is?
It's like basically 1 or 2.
So this is what I found: 38 plus states: New York, New Jersey, Ohio, Massachusetts, Colorado, Virginia. They prohibit advertising aimed at minors, including digital and social marketing.
No. There's a table of NCPG that puts out every year. We can see the table.
So my thing is, but I think this is very important because this is one thing. How you went out and you went ahead in kind of regulatory world and said, okay, I'm going to make this market. I'm going to do this.
Yeah.
I think one thing I've seen is like there are founders who come out and they say things that are expedient to their cause, and they put out information and they're going direct, and they become like the bullet points for people's understanding of a market. And it's so important for you to like be faithful to the truth. I don't like it's just there are not 37 states in which you can legally target gambling to minors on social media. It's just not true.
No, that's incorrect.
Okay, we'll fact check it after the fact. You'll stay post the credits. Okay, we did that fact check. 39 states and DC allow legal sports betting, and 30 plus DC allow online or mobile betting apps. The majority of these limit marketing to adults only and require operators to avoid marketing that appeals to minors. 2 states, Connecticut and Massachusetts, go a bit further. They have a separate provision age-gating social media marketing. So Tarek's point on that narrower claim holds, but he started the conversation elsewhere, asking me if I knew, quote, how many states ban explicit marketing to minors? Not social media, he said, marketing writ large. And that may have been a misspeak. It happens a lot on podcasts, but it risks this misleading talking point instead of a much more nuanced truth. It implies that you could go legally market to minors in 37 or 38 states. You can't do that, guys, so do not go do that. Tarek's broader point, which is about kind of uniform federal regulations, is important, and that's where we went to next.
One of the things I advocate for is uniform federal regulations, and when we talk to policymakers about like establishing a ceiling, a baseline for regulation that everybody has to abide by. And the industry that comes very hard against that is the traditional casinos and sportsbooks.
Yeah, of course.
They hate it. So
yeah, they don't like you.
And they hate the idea of federal regulation.
Yeah.
Because like they're being able to get away with doing things that they should not.
Are you hoping your business moves away from sports betting so that you aren't just like lumped in?
Look, I don't decide what consumers like want to trade. Like that's not my.
And you don't trade yourself.
I'm a free markets person. I believe I can't because
you can't.
I run the exchange. But there are markets that I'm more excited about than others for sure. The point is like this is so interesting is a lot of it is the same consumer like customers and I think the underlying what the topic is less important than the mechanism.
Okay, what's the future of your business? I heard your co-founder Luana talk about going into institutional markets, going international. You're not going to launch a Polymarket type offshore.
No, we're launching like regulatory first always.
Okay, but what about like competition? Because Meta is reportedly exploring a prediction market. Robinhood makes 100 to 200 times more per dollar invested in a prediction market than on a stock market trade, which I thought was crazy.
I don't know if that. I actually don't know the numbers.
Yeah, that I mean, that sounds a little bit. 100
seems a little aggressive, but they probably make more. Yeah.
Yeah. So like,
but they also make a lot more on options trading than stocks.
In a world where there are 10 or 15 of these things, how is Kalshi set up to succeed?
I mean,
like, what's your moat?
The marketplace. We have the most liquid, active, vibrant marketplace, and the largest community of super forecasters. The predictors are participating on Kalshi, and it's a little bit like why Airbnb has been so big for so long. That contributes to having a better product.
There is a conversation right now about like young men in America. They're so behind, et cetera, et cetera. We've done an episode on this. Is there a war on men? We look at the actual data to understand it. I take your point that you said earlier on, which is like, wow, isn't it paternalistic to say we're so worried about the people that are on the platform versus just letting people be on the platform?
You should establish right customer guardrails. I don't think it's like, hey, do this or don't do that. That's very different from, look, there are risks associated with any of these types of activities, and here are the risks. Here's the tools for you to manage your risk, and here's for you to be responsible. Don't do irresponsible things. And you want to. There's always a minority that may use things irresponsibly, whether it's alcohol, whether it's options. I'm not like a person that's saying like, hey, hands off. Yeah. I'm a pro-regulation person. Again, like I go back to saying, I believe in regulation. There needs to always be a dampening function to any mechanism. Otherwise, the mechanism will go crazy. Yeah. And my view is basically, you let people kind of make their own decisions and have individual responsibility, but you add a fence. Yeah. You have to have a fence. And you have to tell them, you have to have the warning signs like, hey, you may get hurt if you overdo it. And there are levels where you start overdoing it where you're like, you gotta slow down, dude. Like, you gotta stop. And our product does that really well today. But I want to be clear, like, this is not me saying like I'm a believer in individual responsibility, but I'm also a believer in regulation. But it just needs to be a delicate balance.
Do you like this kind of conversation?
Yeah,
like
it's
to
fun.
have like a direct conversation about these things?
Yeah,
I feel like a lot of them like tiptoeing, asking you what the thing is.
So I'll tell you the two types of conversation. There's a certain type of conversation where like people just like want to state very vague and terrible sounding things that are like unaddressable.
Like the questions I asked you at the top of this.
At the beginning, right? It's like, what do I say about that? Like, oh, how do you feel about destroying society? Well, I obviously don't agree that I'm destroying society. But this is the type of thing like comments on Twitter, right?
Okay.
Like, you know.
So you said there's two types of conversations.
The second one is like where you're like, there is a genuine interest in digging in. Like, what is actually happening behind this sort of thing? And that is interesting because like sometimes I go back and think about like, okay, like I tinker a little bit. Like I whiteboard after this. I'm like, well, here's some things that like maybe would have missed. And I think with the reality with something that's this big, and I think about it with, whether it's AI, whether it's prediction markets, self-driving cars, Uber, Airbnb at the time.
This big and so novel.
When it gets so big and a lot of consumers are adopting it, you kind of want a healthy societal discourse.
Yeah, you want a market test.
Exactly, a little bit. Like you want to hear the criticisms. Like imagine.
But you want to respect them, is what you're saying. You want to hear criticisms that you respect.
But like vice versa. Like exactly. No, but they need to be
and
real.
you want to also have people.
They need to be rooted in someone that sits me down and says like, hey, have you thought about this because that's a real concern?
Yeah.
And oftentimes I actually take it and I agree with it.
My concern for you on the pharmaceutical markets is I do think they are thin markets that can be easily swung by single investors, and I think it's worth.
Then people won't trust them. You should judge our markets based on their accuracy long term. People have been making that claim about politics forever. They keep saying that political prediction markets are very manipulable. But you play out the last few years and you look at our accuracy, like the calibration chart, which is like what did the prediction markets predict and what ended up happening. Yeah. And that line is near perfect. That is not possible.
But accuracy doesn't imply that no one moved the market.
My point is like, it is not possible to be this perfect if these things are being manipulated left and right? The more important thing is like, we also don't live in a vacuum. You have to compare it to alternatives. Like, are polls being manipulated left and right these days, right? Is the media being manipulated
I've
left and right?
always thought polls are a really bad indicator because like the person who picks up the phone and has 30 minutes to talk to you about like how they're not having sex is the person who's not having sex, which is why all the polls say that no one's having sex.
It's always the same. I mean, but I always tell people, look at the prediction markets next to all the other alternatives. You don't have, like, I don't want people to look at this as and honestly, I don't know of anyone that looks at this as the only source of truth. No one does.
Yeah.
But they look at it because it's increasingly more accurate than they trust it. But look at it, look at the polls, look at what people are saying on Twitter, look at news, look at everything else, and then make your own independent assessment, right? Like, don't just read the New York Times and decide what your view of the world is because it's probably not going to be.
Why are you going to come for the New York Times?
No, but I'm saying New York Times, Wall Street Journal, and don't look at Kalshi and say what your view of the world is. I mean, look at both.
I mean, I think, by the way, I was looking through you were on Lebanese time coming here, so I was looking through the Kalshi IG, and I was like, oh, there's a lot. Like, I see your content vehicle growing. I know you guys have done a partnership with CNBC. We didn't get into that. I have more questions for CNBC on that than you, but I'll take those to those guys. But there is a content. I think the news
should use prediction markets increasingly.
I'm sure you do think that. But there's a real content that's coming out.
Do you agree that the prediction market data? The data so far shows that prediction markets are pretty accurate at predicting the future.
I haven't looked across everything. I don't know, for example,
Can you do that?
I will. Yeah, I mean, I don't know how much time I have, Tarek. But you're going to pay me.
You should do it.
Are you going to give me that Donald Trump Jr. advisory budget?
No, I won't.
Okay,
but
so
you're curious about prediction markets. I'm assuming.
I am curious. I will actually.
So can you do that? Can you go and compare? Like the Fed put out a paper on. The Federal Reserve put out a paper 2 months ago saying that we're the best forecast on the economy they have.
I think
if
it's
the
very
prediction markets are very accurate, shouldn't people at least use them?
You know what? I think that the scary thing about it, and this also is the pharmaceutical thing, is like, what is the prediction market accurate about in the short to medium term that is a cost in the long term?
You're going to be more specific. But
it's a counterfactual. It's hard to know. It's a philosophical question about what...
I think we should think about it. And if there's real, genuine concerns, I'd love to hear them, right? And I think, but fear is not a way to make decisions. It's like, saying no to self-driving cars because we're afraid of them. And I think we would both agree, I hope you would agree, that if we had self-driving cars running around New York, we would probably have less fatalities.
New York is a particularly hard market to look at it, but in general, the fatality rate is lower. So I agree with you on that. I also think that we as a society, especially in the United States, I mean, also in Lebanon, also in Pakistan, I mean, we have like a eat what you kill kind of culture where we are not good. And I think even less so here because we don't have the same collectivism of our cultures, we're not good at absorbing the societal shocks of that. So displacing a tremendous amount of workers and what happens to them and how to adjust for that and having that be something that society can help people through doesn't happen in America. And so it happens at the benevolence of people like you
By the way, I
who
totally
mint
agree with
billions
you.
of dollars and who become Dan Gilbert and give to the city of Detroit and all that.
Yeah, no, but I agree with you. And that's why, like, there's a bucket of criticisms I always say. It's like, that's what you just said, and I think you would agree with me. It's not like, let's ban self-driving car.
No.
It's actually, let's sit down. This is probably a good thing for society, but there is all the negatives that are sitting here.
Yeah, and we need to absorb
How do we
those.
deal with it?
Yeah.
Like, I'll sit down. But the problem is the conversation has gotten so polarized in this country that it's like either you're pro or against.
Yeah, but fuck that conversation. That conversation is uninteresting.
And I wish less people are like either pro or against AI, pro or against crypto, pro or against prediction markets, and more people are like, see it for all what these things are. They're like a lot of benefits and there are downsides. And you have to figure out how to maximize the benefits while minimizing the downsides. Yeah. Right? And there are real solutions to that, right? The problem is those solutions don't get you the likes on Twitter.
They don't, but that's okay. They get me audience for this show, which this show is like people who are curious and want to understand the long form and hear the nuance. Yeah. What are you going to do as a leader? I know you're 30, but like, are you going to commit to the giving pledge? Are you thinking about philanthropy? Like, how are you thinking about
I think about this a lot. I mean,
yourself?
I always say this, like, I think, one of the things, like, I'm not...
Because how much you're worth, like $2 billion right now,
taxes.
supposedly?
I mean, that's like...
paper money.
There's numbers. But like, the tax, like, I always think about, for example, like, I'm not the one that's going to always be opposed to taxes, but I really care about how it's used. Like, I care a lot about math, and I care a lot about financial literacy and honestly education in general. I really do, because like, I think the math is what got me to where I am. I love math. Like when I was in Lebanon and all the craziness was happening, like math was my refuge. Yeah. And it got me to MIT, and then it got me to build a company. And one of the things that like I think concerns me a little bit is like I feel like people, especially in the kind of age of AI, like I just feel like people are like not as driven anymore. Like especially in like my mom always wanted me to come back to the US because it was like this is the place where you can like make it if you work hard. Yeah. And you're here, right? Like you can do anything, right? Like you start. And I think our generation, we felt that when we were graduating from college. But now you talk to people out of college and you're like, there's certain jadedness that you usually get when you're like 50 or 60 years old. You don't get when you're in college. Like,
they feel like the world is stacked against them.
They're jaded a bit. I don't know what all the solutions is, but I think that's an area where I want to do work in.
Mamdani has galvanized these people with a particular mission. Do you like the mayor of New York? Are you into him?
I think he's cool. Yeah. Like I think, and he's every time he gets on camera, like, you want to like watch him. Some things I disagree, some things I agree, I would say. I think some of the issues are real. Like the issues of wealth inequality are very real. The thing that I go back to, like people feeling jaded and they don't have a shot, that's like a very bad thing for society long term, Yeah. Okay, I end every episode of Smart Girl Dumb Questions asking my guests a question they don't know the answer to. But what's a dumb question you have that you haven't known the answer to, haven't asked to your chat daddy? I've always wondered, like, I never really read that much into it. It's like, why do we need to sleep so much? And how have we not figured out how to reduce the amount of sleep we need? Because if you think about it, like, like if you live like 100 years, you sleep like 35 years of those. Yeah. That's a lot. Like, that's like a lot of sleep. But I just always felt like maybe there should be more like looked into like, generally sleep research, like are people sleeping well and is it efficient, etc. Do you how much do you sleep? I don't sleep well. You don't wear an aura and all this. You're not like a tech bro. You're not wearing all this stuff. Lebanese people don't sleep well. Like I know. They're like always fidgety and stuff. Anxious. So yeah. Growing up in a war-torn country will do it for you. Okay, I like that question. Why can't we be more efficient with sleep? Yeah. It's because like I think it's because our neurology like requires the rest. Yeah, but what exactly happens when you sleep? Like, what is it the thing that you really need? And what is rest? Like, what is the physical? And is there other ways to compensate for it? I mean, I don't know. But if we have a good answer, are you going to start doing more of it? We'll see. We'll see. All right. Thank you so much, Tarek, for showing up. I really appreciate this. This was fun. Yeah, it's great. Thanks a lot. Wow, I feel like I just like left a Middle Eastern dinner party. I so appreciated Tarek making the time. It was an interesting conversation, and I think we hear so much in our culture right now, this anti-elitist argument for why things are good. And it's kind of like a rallying cry to this anti-elite world, ironically being made by a guy who went to MIT, talking to a girl who went to another small school outside of Boston. I also think there's a difference between what a prediction market can tell you when it comes to something like Brexit or a big popular decision and the kind of
expertise of the wisdom of the crowd in that world versus the expertise of the wisdom of the crowd when it comes to pharmaceuticals or something else, where like the insider edge becomes a lot. And that is going to be a huge question of how he can police and what he is not policing and what we are not finding as it relates to insider trading on these markets. One thing, it seems to me is like these markets are here, they're growing in a big way. They've, had major federal court victories under the Biden administration. The Biden administration pushed back a lot on those. And the Trump administration has been much more lenient to Dick Costolo's question of, you have an administration who's favorable to you right now. You have a son of a president who's an advisor to you right now. I'm curious how that will hold up. I'm also curious about the wisdom of the discerning individual. So I want to know what you think of this episode. Are you interested in these prediction markets? Do you think that they're gambling or not? Where do you think these state cases are going to go? And did you learn something in this conversation that changed your mind? You can email me at nayeemaraza101@gmail.com. You can leave a comment. Please leave us a review. Share this episode with your friends. And that's it for this episode of Smart Girl Dumb Questions. Today's show was produced by Sanjana Nigam and Andrea Lopez Cruzado. It was edited by Davey Chin and mixed by Cam Schenken, engineered by the great Jamie Van Korf, and shot in Wonder Studios in Manhattan, and the ending is shot in WTF Studios in Midtown Manhattan. Thank you for having me, guys. I'm your host, Nayeema Raza, and I'll see you next week for an all-new Smart Girl Dumb Questions